inside of the smaller price section here to actually get an execution to take the market down okay. So if we approach it this way, basically, if the market confirms a reversal in here, we get a trade if it doesn't confirm a reversal. So if the market just comes up and goes straight through, then because we waited on that confirmation, we actually don't take a loss. We just don't take any trade at all because it hasn't confirmed so. The extreme zone is the highest probability point to sell from or buy from when it comes to supply and demand. We would be happy in this instance then to place a sell order in the terms of a sell limit at this level. If you're going to be placing sell limits and buy limits, the best place to do that is at extreme zones. And if you're going to be approaching the market with confirmation, or you're approaching a market that has multiple potential zones, then you're going to want to use confirmation on pretty much all of them except the extreme zone. Now, when we see the market come up into this area, we do, however, get a confirmation entry. And I want to walk you through it now so you can see what it looks like in the real markets. So we're going to remove that for now, the hypothetical sell limit idea, and we'll take a look at this structure that we have right here. We've hit the supply zone just there, which gives us what we want to see to have confidence and clarity to start selling. Now, the confirmation entry has actually arisen inside of this price action. So if we mark the low to the height of the low, this is going to be our trending structure right now. Okay, we then have basically smaller trending price action like that. This is the kind of trend that we have, okay, by marking the highs and lows of this bullish movement. We're then basically looking for this to shift bearish to provide us confirmation to sell into this market. Now, as we can see then, our swing lows or our higher lows are going to be pretty much at this point here. And then a more significant one will be this one here. Now, we can see with this bearish candle, we've had a closure beneath both of these lows. So what this actually does is allow us to sell into this because we are seeing with the formation of this lower low that we've just got here. We are seeing the market shifting to bearish, to a selling setting. We're seeing it shift to a downtrend, which agrees with the high time frame narrative of course, this bearish trend idea. So what we do here by bringing this in is actually use kind of the big picture and then a more refined smaller picture to build a scenario in the market where the high and the low time frames are in complete agreement. When we have that, we can sell with confidence and because now we know the high time frame is telling us the market is bearish. The low time frame has also now agreed and told us the market is bearish. We actually use supply and demand here in a fractal nature. So fractal essentially means the same patterns will form on all different time frames. They will form in all different scenarios, regardless of whether you're looking at the daily, the weekly, regardless of whether you're looking at the high time frame, zoomed out price action, or the more refined zoomed in price action. It's all going to work the same. So the big picture trend, which is going to be this one that we're looking at, this is bearish, and we have our supply zone, which we wanted to sell from. Now the smaller picture trend, which is going to be this one here, has also now shifted bearish, and what it's done in doing so is provide us with a supply zone to sell from. Right now, the supply zone in question here is the last indecision candle before the impulse away. Very simple stuff. That means we can therefore place our sell limit on this area, target down into the low or wherever we want this to go to, and for this, we don't have to put the stop over this swing high because we have new confirmations inside of this structure, so we can actually put our stop loss over this high, and that's going to provide a very safe trade as well. But this time we have that kind of double confirmation. We've had that shift standard confirmation here. We've sold on this retest here, and now we'd be looking for the market to roll over and make a new low given that it's reacted from supply once, and then reacted from the second supply, providing two supply reactions. And as you can see, that is exactly what happens. So, in a general market scenario, you want to focus primarily on the extreme zone, which is going to be the last imbalanced candle in this leg of price action. For this scenario, it's this one here. If there are other zones to focus on, such as this one here, then the best way to approach these if you want to focus on these zones at all is to go in with the standard confirmation, which, as you've just seen, is actually what we've got going on here. This pattern of shifting from higher highs and higher lows into a lower low, and then pulling back and selling from supply can be utilized not only from the extreme zones, but from the smaller zones within. If you see this pattern formulating in one of the other zones in a scenario where there are multiple supply zones to choose from, then that can give you the confirmation you want in order to get into a trade that is likely to win. But if there is no confirmation, such as there wasn't any in this zone, then you simply avoid taking the trade, meaning in most cases you're going to avoid taking a loss. And then you can take your trades comfortably from the extreme zone, or if you really want to, you can use that confirmation from there anyway. And that a lot of the times is going to provide you with a good entry to get in. Okay, but I just want to give you a warning. Confirmation entries, while they are very, very strong, are not going to happen all of the time. If we take a look back at the price action here, okay, I'll jump it back just to show you. At this point, our extreme zone was this candle here, this indecision candle. We had this big push to the downside. We have no imbalances above. We have no other zones left open. So our extreme zone is the one that we are looking at just here. If you were going to wait for a confirmation from this zone, you would then want to see the market pull in and make a shift in structure like this that would allow you to get into a trade. However, as you will see, and as you may have already seen, there was no confirmation given. In fact, the confirmation for this trade is actually going to be when the market returns all the way to the supply. But this is going to mean you're not able to profit on this entire move down. You're going to have to wait for the pullback to get it. So essentially, that becomes a missed opportunity. So you can avoid that from happening. If you focus on extreme zones, as I say, sell and buy limits, most of the time are going to be good from these. It's not always going to work. Sometimes the market will flip on you. But the risk reward you can get from these, if you sold this extreme zone, stop above the zone, target down into, wherever you want it to go. You've got potential 5%, 6%, 7% trades coming in here, which means even if this only one half of the time, you're making a significant profit overall due to the fact that every time you risk $100, you're making $700 in return, right? So they stack up from a risk-reward perspective, but that confirmation entry is a really solid way to number one. Double confirm the trades if you really feel like you need it. So, getting in from around this point after this market confirmation has occurred. And number two, you can use this if you're not trading from the extreme zone and if you're looking at a more refined zone as well. So that is kind of how you differentiate between multiple zones. The extreme zone is always the highest probability, the highest reward, the most favorable zone to buy or sell from. But if there are other areas that you might want to look at, just go at it with that confirmation perspective. As long as you wait for that, you're going to get what you want. You're going to have the confirmation, you'll have the confidence and the clarity to get into the trade now. Just to quickly show you what this looks like from a bullish perspective, then we would have instead a demand zone here, demand zones. Retested market pushes up, we get a bullish break of structure this time, so the market pushes over these lower highs, and then pulling back, we want to utilize the demand zone the last candle before. The impulse that broke the structure. That's where we're going to be getting into a trade there. You can trade that up to the next size or beyond if you want to. That is a breakdown of extreme zones, confirmation entries, and how to approach supply and demand zones in real markets where things aren't as clean as theory talk. So hopefully that's valuable. Let's move on. Now, something really cool about supply and demand is that this is a fractal theory. Fractal means that the concept works on pretty much any time frame you want to look at, whether you want to look at the weekly, the daily, the 4-hour, the 5-minute, the 1-minute, it's all the same. So let's take a look at some examples. I bet you couldn't guess what time frame these 3 different examples are from. No, obviously they all look very similar. The market follows price action regardless. These are the monthly, the 1 week, and the 1 hour. No, I'm just kidding. It's the hourly, the 4-hour, and the 1-minute time frame. And I do that to show you that really, you are never going to guess what time frame a supply or demand zone is formed on just by looking at it, which is a great thing because it means whether you're day trading, swing trading, position trading, scalping. These concepts will work regardless of the time frame. So don't worry, you don't have to use a specific time frame to use supply and demand. You can use it anywhere. All right, so one big thing that you should bring into your trading is top-down analysis, which is pretty much the idea of using multiple different time frames to work out where the market's going to go. You go from the top down in the weekly and daily to build narratives, and you go to the lower time frames and actually find setups. Supply and demand can be used in this context, and it can be used for 2 things. First of all, it can be used to identify target areas. Second of all, It can be used to identify where trades are likely to take place from and lead into. So we're taking a look at an example here on Euro CAD. We're on the weekly time frame. As I've shown you with fractals, it doesn't really matter what kind of time frames you're working on, but this is a breakdown as to how you can take advantage of the targets and entries and building narratives on the high time frames using supply and demand. Here on the weekly, I've just marked out a supply zone. I've just marked out a demand zone because the weekly time frame moves so slowly and it covers so much ground. We're not really looking for massive movements on a time frame like this. What we're looking for is generally to find areas the market could lead into as targets and as trade entries. So if we build this picture, supply and demand, we've now got a clear range as maybe the market could go up to here. If it did and we got confirmation, we could sell down to here. Or maybe the market could go down to here. And if it did, we would then look for opportunity to buy up to here, and these ranges being weekly ranges are actually pretty big. So if we were to look for a sell from here down to here, we're looking at over 130 pips. That's a pretty big range you can trade through that will give you some very big trades. And then the run from this zone to this zone is actually 400 pips, which again is a very big range that you can find one very large or multiple smaller trades within. Now, if we then run this market forward, obviously it's lower time frames where you'll actually be doing the analysis. But you're going to see that we actually do build narratives and ideas here because number one, clear and balanced demand. Well, if the market is showing weakness down to this level, selling here would be a good trade to look for. So that's going to be a position that you could profit from. Number two, when the zone is filled, we know the next likely move for it to make is probably going to be a drive to the upside. So you could start looking for buying opportunities from there, given lower time frame confirmations. Now, let's say we get into the point that we're at right now. We've had again a break of structure where the markets came and created a higher high. We have our standard confirmation pattern looking like this. And now we would say we're looking for a long position. So what do we do? Well, on the weekly, we would identify an area of demand like so. And then on the lower time frames, because we've now got this high time frame narrative of pulling back to here and buying, we could look for opportunities to sell from where we are throughout the week using lower time frames daily for our. And then when we meet this area, we could start looking for opportunities to buy. So if you build your high time frame narratives, all you literally need to do is use very simple ranges and very simple supply and demand. And as you can see by how this market is forming right now, it's going to fit into your analysis and going to give you some very, very good trading opportunities, number one, in the form of sells down into demand zones or buys up into supply zones, as we saw here. But number two, once the range is outfilled and once these demand zones and supply zones are hit well, then you've got clear entry opportunities because you understand the probability is that that zone will hold and we will likely lead through towards the next area with the next movement in price. Action. Weekly time frames and daily time frames for building narratives with supply and demand. Very strong stuff. Super simple and very effective as well. You can start to trade range to range using the supply and demand format. It really simplifies your high time frame analysis and gives you biases to work with inside of each week. So to lead on and elaborate on one of the concepts we just discussed there, this is the idea of using supply and demand not only for entries, but also for targets. We've gone to a completely polarizing opportunity. We are looking at the 2-minute time frame to highlight that supply and demand works the same on every single time frame that you look at. Okay, for a setup like this, the opposing move is basically going to be this push down, right? Or in the real example here, we're looking inside of here to find areas of supply. Let's take a look from the low then. Well, we have this one, but this has been hit. This is efficient. There is no reason to look at this anymore. As we know, when the market hits a supply zone or a demand zone more than once, becomes essentially useless, which is also good news, by the way, for forecasting the strength of this trade, because the fact we've gotten back into this supply zone again and traded higher than we did previously and closed higher than we even did when we formed the supply zone tells us this is a strong move, okay, so they can actually be used multiple retests on supply or demand zones to indicate strength against the zone, which allows us to get more clarity for trades like this one.